tremendous. I'm watching way too many SVB videos. My local news says, don't panic. Kind of makes me want to panic. May say it's contained now, expecting more regional bank runs. I bet the runs will probably go on for the rest of the week. I wouldn't doubt if we see more halts on regional banks, and then we see a big old bounce, big dead cat bounce on them. But I have little doubt there are more banks in the U.S. that are heavily tied in these fixed rate loans, these fixed rate bonds, and that they're watching them shrink. If you don't know how or why these fixed rate bonds are killing everything, okay. 2021, right? You make some loans to venture capital people, vineyards, homeowners, whatever, and it's at like 2%, 1.5%. It's really tiny. And it's fixed rate for 10 or 30 years, right? So you're going to get this guaranteed return for 10 or 30 years. You're like, cool, whatever. Interest rates are low. That's fine. Okay, a year and a half later, all of a sudden interest rates are at 5, 6, 7, 8%. So if you have bonds at 1 or 2%, and there's now a whole bunch of bonds that are paying out at between 4 and 8%, no one wants your bonds because inflation is at 8 to 10%, right? So if you own those bonds that are 1 and 2%, you're losing money in the end because the interest rate is below that of the natural inflation. So the bonds that are below those inflation rates are worthless. Probably buy them at 10, 20 cents on the dollar. So the bonds that are at 8% are what people want. And if you have taken all of your depositors' cash, all the $300 billion in cash the VCs have given and whatnot, and you put them all into these fixed rate bonds, you're screwed. They just lost all their money. Gone. Poof. You can't sell them for shit. And if there's a bank run, because we'll realize, oh crap, they put all of our money into these crappy bonds. We need to get our money out before everyone else tries to get their money out, and then your bank's going to blink out of existence. So this is where we are. And if there are other banks right now that have a majority of their deposits held in these low interest rate bonds, you can believe that they're all drinking a bunch of Pepto right now and just worried sick. They've got ulcers coming out of everywhere. So yeah, regional banks could be hard. And I wouldn't doubt if some of the meetings they had this weekend with the Fed was Powell telling everybody like, oh my God, you idiots. I told you a year ago to get rid of all of your low interest rate bonds. And Silicon Valley Bank, you fucking idiots, you didn't do it. What is wrong with you? I gave you a year to get this done. You could have sold fine, invested in higher interest rate bonds and be totally fine. And if there's any other you buttholes in here that didn't do that, you're going to go under too. So it's too late for them to sell that stuff now. That stuff's crap. They can't repo it. They can't use it for anything. So yeah, there's more. There's more they can go under. I mean, we haven't even touched on the prime broker crisis of all these over-leveraged family funds and hedge funds. Trillions of dollars have been given to these family funds and hedge funds, and they've made really, really poor plays with them. And they owe a lot. And a lot of garbage is bouncing around in the perpetual hot potato market of debt swaps. And the music's going to stop at some point. And when it does, we'll see a major investment bank go under. It could be someone random, could be someone well-known. Credit Suisse is definitely going under. It's not a matter of if, but when for those guys. Okay.